everybody, welcome to TraderMerlin Show. It is your Wednesday edition. Again, I hope you had a great day out there. Certainly, if you're a cryptocurrency holder, you're loving it. I see some comments on that. Big Eb says, congratulations, all you Bitcoin and GBTC holders. Yeah, it wasn't just those two. I mean, a lot of them have been moving up just incredible leaps and bounds over the past couple of weeks. So congrats to everybody there. The question now becomes, do you want to take some profit or are you going to hold this for the long term? Yes, shout out to everybody. Gregory says, buy GME. GameStop, huh? Yeah, you're not going to get me to promote diamond hands and go into GameStop. I think it's kind of interesting. Maybe later on the show we'll talk about some of the political side of it where they're really going after some of the guys that were in that room talking about GameStop. To me, if you're going after those people, then you better be looking in the deep bowels of Bank of America, Wells Fargo, Goldman Sachs, JP Morgan. You think that type of stuff doesn't happen on their level on a daily basis, manipulating the retail population? Absolutely. And that kind of does dovetail into today's topic, which is going to be following market gurus. I wanted to kind of answer, well, there was 3 questions that came in particularly on this topic over the past couple weeks, and I thought, it might be a good opportunity to discuss it because it's been one of those things that's bugged me forever. When I got started with this, I was under the belief system that we all had to follow somebody like a Warren Buffett or a Soros or a Graham, whoever these gurus are, and we couldn't do without them, that we really needed their guidance because there was something innately special about them, that they were the ones, the chosen ones that were just better than everybody. The longer I do this, the more I realize that is just a giant steaming crock of doo-doo right there. It's a huge fallacy, and I'll show you here in a second as we go through. But let me show you some of the listener questions that came through on this topic. This first one here from Alan. Alan says, what are your thoughts on just following the big guys, Buffett, Gates, and Soros? Now, doesn't that kind of make sense? I mean, if you look at the list of the richest people in the world, Soros is on it, Gates is on it, Buffett is on it. So why don't we just take a step back and just buy whatever Buffett is buying, right? Shouldn't we logically be able to achieve the same rates of return as Buffett if we just bought what he's buying, or better yet, just buy Berkshire Hathaway? The problem there is you'll never be able to replicate those results doing what he is doing because you are simply just not big enough or powerful enough. So I'll get into that question. I'm going to read through all these questions and we'll dive through them as a collective group because you know how I tend to go in scattered directions. The second question, this one came in from Heather. Heather says, what's your thoughts on Bill Ackman, who again is one of the other... He's a giant guy out there. I think he's got a $10 billion hedge fund with Pershing Square. And then finally, Tim, and actually another one came in like 20 minutes ago. Can you get Larry Jacobson back on to talk about how he applies Buffett's strategy? All right, so let's talk a little bit about these gurus. Now, I look at it objectively, I think there's 5 things that all of these gurus have that we do not have, and probably never will have on the grand scheme of things, just because most of us are small fish on the big picture. The number one thing that these gurus have going for them is relationships. These are relationships they've built up over the years, and it goes back to something I talked about on the show, I don't know, maybe last week or a couple weeks ago, where I said, if you're a baseball player, you hang out with baseball players. If you are a bum, you hang out with bums. If you're a trader, you should be hanging out with traders. Well, if you're a multi-billion-dollar hedge fund manager, you're hanging out with multi-billion-dollar hedge fund managers and CEOs of major corporations because there's a mutual benefit there for the companies as well as the hedge funds, right? If I'm a CEO of a company and I can get Warren Buffett to buy into my company, I know that the share prices are going to go much higher than they probably should be simply because Warren Buffett put his name on it, right? That's the same thing that happened with Snowflake. I haven't even looked at that stock, but Snowflake IPO did something very similar. It's utilizing the guru to pump things up and potentially to an overinflated level. So the first thing they have is relationships. Number 2 is they have researchers, and we know that the big banks are out there hiring the brightest and best minds from all the colleges in the world. I mean, they're really looking for those that are going to be able to design algorithms or do analysis that's going to give them that competitive edge. We are left to our own devices. Now, you might be part of a small community. You might be part of an XLT, an OTA or something. Might be in Traders Army or Stockability, these different groups out there where you have a collective group sharing ideas and working to get better, but you're not going to have the collective research power of Goldman Sachs. It's just not going to happen. I mean, it's sad to say, I saw an article or an interview years ago where they were saying that the brightest minds in like bioengineering and chemistry are now going to develop quant systems for Goldman Sachs and other big firms. It's like, these people could probably cure cancer, but now they're just going to develop an algorithm that's going to make 1/1000th of a penny on every transaction and make that firm even richer. Kind of frustrating. All right, so that's 2, is research. Relationships, research. The third one is a little bit subjective, and that's power, right? The ability of somebody like Warren Buffett to manipulate not just politicians, but major CEOs and companies. That's real. There's nothing I'm going to say that's going to influence my politicians, right? They don't care about me. I'm a gnat on the windshield of their car. They'll just turn the wipers on and throw me off to the side. But Buffett, that's a boulder landing on the hood of your car. He has sway. That's power, and that can help him achieve better rates of return. All right, number 4 that they have, money, right? We're talking billions of dollars. If you look at, I'll run through some of the major names out there that you might recognize. Warren Buffett, right, runs Berkshire Hathaway. He's got $269 billion under management. That is a massive amount of capital, so he could single-handedly move a market or manipulate a market. Not that Warren Buffett's ever done that in the past with silver, hint, hint, hint. Number 2, what do you got? Carl Icahn running Icahn Capital Management. He's got about $20 billion under management. Seth Klarman, who's running the Baupost, he's got $10 billion. Ackman's got $10 billion. David Tepper, $6 billion. You and I, again, as I mentioned yesterday, probably running around with maybe you got 10,000, maybe you got 50,000, maybe you got 100 to 200,000, somewhere in there. We're not going to make those kind of waves and have the impact on these companies. So that's money is number 4 on this list that I have of why these gurus have an advantage over us in a dramatic way. Don't worry, guys. This is not a pump for gurus. I will set them up, and I will knock them down just as quickly as I stack them up right there. The last part of this is very subjective. Now, to the question that came through from, I believe it was Alan, he says, what are your thoughts on Buffett, Gates, and Soros? As what? As human beings, as philanthropists, as businessmen, as investors, it all just depends, right? It all depends on the individual person and what they're buying and selling. Each one of these guys has a different objective, and I think that that's important too. If you're thinking about following any of these guys or gals, that you want to think of what is their style. Buffett's been pretty clear. If I buy one share, I may as well buy the whole company, and he is a very long-term holder. So to me, yeah, if you're going to be a long-term investor, Buffett's probably a great way to go. You look at somebody like Ackman. Well, Ackman is not necessarily a long-term holder. He might be shorting stocks and going long. He's doing both, whereas Buffett is not going to short a stock, right? He's just going to be buying undervalued companies. So it really depends on what the goals and objectives are for each one of these gurus. Is it in line with what you want? Many of you just want to be making money. I get that. We can look at the track records of these guys as well to see if their specific style or investment methodology actually does in fact beat the market. Because I'll tell you what, the industry sure does make it seem like they are the best at rates of return. There's no arguing when you look back in history that Warren Buffett is probably one of the greatest investors because of his compounding annualized rate of return. But let me ask you this. Out of the last, so Bill Ackman, you guys know Bill Ackman, right? He's got a $10 billion fund. He's very, very prominent on CNBC, Fox, Bloomberg, all these stations. He is a market mover. Let me ask you this. How many, out of the last 5 years, how many of those did Bill Ackman's fund lose money? Right? He's the guru. The markets have been up significantly each of the last 5 years. Out of those last 5 years, how many years did Bill Ackman lose money, right? If you were just a buy and hold investor, you probably shouldn't have lost. I'm curious what you guys think. Out of 5, how many did he lose? Now, when we look at the media, they paint him out to be this amazing investor, this absolute guru that you should be pouring your money into his firm. The interesting thing about this is, if you look at what Ackman has done, 3 out of the last 5 years, he has lost money. His fund was shorting Herbalife and got smoked. Valiant Pharmaceuticals was another one that he kept on talking about buying, and he lost, or he bought a bunch of Valiant, and he lost a ton. So I think the important thing there, and just that little lesson, is even the biggest guys in the world, Ackman, is not always going to win. And the same thing goes true for us as individual retail guys. We have to understand that there's periods where we're going to lose. It's about the long-term big picture that makes us I think makes us feel more optimistic that we'll have a chance at this long term. Some of you might be struggling with that right now, where you have a down year and you feel like a failure. Stick to your guns, stick to your strategy, and you'll pull back through. How does he compare to the S&P 500? Great question, Nick. So let me show you a quick little resource. I wanted to run through those 5 things first. I'm going to show you a bunch of charts here. This isn't just going to be anecdotal. I'll show you facts, figures, and numbers here to back this up. But when I talk about the benefits they have is critical. There's 5, which I mentioned: relationships, research, power, money, and time. All of these guys have the benefit of having time on their side to ride out significant drawdowns. I mean, at one point, Ackman's fund was down billions of dollars on Valiant Pharmaceuticals. Fortunately for him, he had the benefit of time, benefit of more capital, benefit of connections to get more money once he was in such a bad losing trade, so he could double down and add to this losing position, things that we should not be doing as retail investors. All right, so that was the advantages that these gurus have. What don't they have, right? What are they missing that you and I have that's an advantage? I mentioned this one yesterday, is flexibility. The ability for Warren Buffett or Ackman or Soros or Gates to unload an entire portfolio position when they're carrying tens of millions of shares is a daunting task, right? When I'm out there day trading and I've got 1,000 shares or 5,000 shares, I can hit a button and no, I'm not going to get totally screwed on my execution because I'm already trading something that is liquid enough, meaning that there's enough volume there to absorb my block of shares. But I can assure you, if you take, Discovery Financial Services, right? You take Discovery Financial Services and you try to unload 10 million shares at once, you're going to crater that stock, right? We can do it. They can't because they're so big. The other side of this is the results. Going through some different websites, their results aren't that great. They are not these market gurus. So to go through my symposium here, my synopsis is, don't follow these guys. You can do a better job by yourself. Now let me show you some numbers here to back all this stuff up. Let me see if I can bring this page up here. Had it all set up. All right, there you go. So here, I've got Bill Ackman here. I have no relationship with this stock site or this site, guys. I don't have a relationship with anybody because I don't get paid by anybody. Tom says, I've never been down billions. Not yet, buddy. Not yet. I'm with Big M on that one. This is a site called GuruFocus.com. You guys, you can check it out. I think it's a pretty interesting one, but I question the benefit of it just because should we really be following these experts? So what you can do is at the top of it, I'll zoom in so you guys can see some bigger numbers. Go up here to Gurus, and you'll notice that there's a list of gurus. So if you want to follow a specific person, guru portfolios, and then over here it's got some of the major names. So let's just click on Warren Buffett real quick. Okay, so let me get rid of some of that. Close this one. So what I'm doing now is I'm just going to look through Warren Buffett, see what he's doing. Right now he's got 47 stocks in his portfolio. You can see a pie chart of what he's got. His largest holding by far is Apple, right? Roughly, how much has he got? He's got 8. Oh gosh, I can't even read that number. It's so big. But here's what's interesting. For those of you who are asking about following the gurus, here's where it gets challenging for me. These guys are not required to report. They report quarterly, right? It's not like you can get a second-by-second play-by-play of what Ackman or Buffett or Icahn or Klarman are holding. You're getting it delayed. It's based off a quarterly report. So the last information we have for Warren Buffett is when he filed his quarterly report for Berkshire Hathaway, which was December 31st of 2020. And you can see he reduced his Apple position here. Verizon he added to. He reduced Wells Fargo. He dumped all of his Barrick Gold. Sorry, Brendan. He dumped M&T Bank, and you can see it says sold out. Like he completely dumped that position. So it's nice to see the overall trends of what their logic and thinking is. There's actually a couple different sites where they'll break down exactly how much Apple he sold in this quarter. But that's a 3-month window of time that you have to deal with. So if I was a major hedge fund, I could be utilizing this information to get you to making what you would think is an informed investment decision. Let me explain. So let's say, for example, I want to get a specific stock to move up. I'm going to buy some, and I want it to move up significantly. To remove the risk for me, and let's say it's Merlin's hedge fund. I go out there and I've got a $2 billion hedge fund, and I say, okay, I want stock XYZ to move. So what I will do is, right at the last second, before I have to report my portfolio positions, what this hedge fund is in, I would go and buy a big block of stock XYZ, and then I would also make it a point to go on to Fox, Bloomberg, CNBC, all these different stations, and I would say, yeah, you know what, we're really interested in stock XYZ right now. instantly the retail population, who we all call affectionately sheeple because they listen to these gurus, they're going to jump on stock XYZ without doing any research whatsoever and automatically pump this stock up. Very rarely is it going to dump, right? Retail people looking for, just tell me what to buy. So they'll buy stock XYZ, and now, over the next 3 months, while that thing is moving up because the retail people think that I'm building a position, I'm going to unload my position, right? This is classic tactics used by big firms to get out of positions and build positions and use retail population to buy it and pump it up for me. Yeah, but Big Eb says he dumped Wells Fargo way too soon. Yeah. He also had a very significant position in it. Let's check out the position. He's not out of it. He reduced his position 58%, and is currently, I think maybe it's, there you go. I'll step out one. You can see he still has 52 million shares. So let's not say he dumped it, right? he didn't dump it, but he got out of half. So, but what I like about this is it does break down their holdings. You can see the trends. You can see their average price. That's nice. But let's go here and go to portfolio performance, just to give an idea. Now, obviously, Warren Buffett, I mean, this is what you want it to look like, right? It is just great. But you can scroll down here and it will show you that in 2019, he had an 11% rate of return. The S&P was 28%. So he underperformed by 17%. Right? So here's this guru, but if you just bought SPY, you would have beaten him by 17.8%. Now, the 2018, he had a gain of 0.4%. I mean, he just barely made money. He would have been better putting that $269 billion in a CD and getting 1%. But he beat the market, which was down 6.35% in 2018. In 2017, he beat it. He had 23% rate of return. Market was up 19. He beat it by 3.6%. This, to me, is probably the most important part right here, where you have beats of the S&P. That's called excess gain percentage on this portfolio. Now, let's go look at somebody else. Let's get rid of this guy, and let's go look at Ackman, because everyone loves Bill Ackman and talks so much about this guy. Look at this. 2018, he was negative 1.2% rate of return. 2017, he lost 1.6%. 2016, lost 9.6%. 2015, lost 16.2%. You telling this guy is an expert? I just have a hard time following these people when you can look historically and see that their rates of return are not only subpar, they're grossly underperforming the market simply by SPY, and you would have been doing very, very much better. At least as I've been underimpressed with Berkshire. You know, out of all of them, Buffett would still be the number one on my list, just from a long-term investment perspective. You know, I like his methodology. I think that he's an idiot at times because he refuses to acknowledge new technologies. But that's part of his style, right? He wants something that's proven, it's tested, it's got, you know, history behind it where he's got a track record to go off of. You know, jumping into Riot blockchain right now or some of these companies, that's high risk, man. So I applaud it, but you're not going to get those rates of return that are just through the roof like Ackman. Ackman had a 70% rate of return last year. I believe was 70% for 2020. That's the best that he's ever done, ever. To me, I think with good discipline, money management, and really staying on top of it and having some good luck on my side, 70% rate of return for a year is not that challenging to do. For him, it's harder because of the size. They have so much going. True, Lisa. Flipping a coin doesn't necessarily work 50% of the time. Or rolling the dice, right? 7's supposed to be the most common number when you roll dice. I don't know if anybody here plays Catan. I play Catan. I've fallen in this rabbit hole. I enjoy playing Catan. It's Catan. It's a classic board game. 7 is the most common number, right? We know if you roll 2 dice, 7 should be the most commonly rolled. I had one game that I played that the 7 came up one time out of like 60 rolls. That's just mathematically almost impossible for that to happen. But hey, these things do happen. So, all right, what else do we got on this page? I want to go into a couple others because we had Ackman. Again, Ackman, you can scroll up here and it'll show you his most recent holdings, current portfolio. Oops, or stock picks. There you go. So you can see he's dumped all of his Berkshire Hathaway. No love lost there. He's dumped all of his Blackstone and Park Hotels. But, I mean, honestly, if you're buying any of these things, I think you just really got to be careful because who's to say that they're smarter than you? You might look at the overall numbers and think, oh, well, they're making billions of dollars. He's got to be smarter than me. No, he just has billions of dollars backing him up, right? To me, that's the big thing that these guys have. Again, is the money side of it, time, power, relationships, etc. So I don't trust any of these guys. Let's go to Carl Icahn. I'll just check out what his performance has been. So here you can see is one of his major holdings is his own company. Isn't that nice? A drug dealer. Don't get high off your own supply. You can see he's got Xerox, Tenneco, Dana, Bausch healthcare companies. A lot of these are very different names, right? These aren't your mainstream ones, except maybe Freeport-McMoRan, which he dumped out of all of it. Wow, that's not a good choice there. But again, this was back in June of 2020. He really didn't make too many portfolio adjustments in December 2020. So we can go down here, click on his performance, and just curious to see what he's done. So he's actually posting some pretty nice numbers. I mean, this only goes to 2013. It should have the others. So 2013, he was posting great numbers, and all of a sudden, it actually looks like he's been losing pretty consistently since then. All right, let me see. Brendan, I'm up 21% year-to-date on my equities portfolio, number one, and the other portfolio, awesome, right? And Brendan, it's not, first off, don't gloat. Gloating will get you murdered by the markets, I'm telling you. But it's also the consistency side of it. The challenge that these guys have, especially as big hedge funds, is they're trying to consistently replicate these results. And as you know, that's probably one of the hardest things to do is to develop a consistent market return. So while you might be up 21% for Q1 of this year, we've got a long year ahead of us to see what we end up with by the end of the year. Let me see. Just scrolling through here, see if I have any listener questions that came through for me. And if you guys have them specifically, just put question marks in front of your questions so I know which ones are dedicated to me. So Nick asked, how does he compare to the S&P 500? There you go, Nick. And that's, again, you can go to Trader Guru or GuruFocus.com to find out that stuff. My bottom line here is I don't believe that you should follow any market gurus. And by the way, somebody posted on Twitter, I got to give him a shout out. This is one of the funniest ones that came up today. So I posted this, said, should you follow market gurus? And and one of the guys on there, it was great. What did he say? Let's see. Oh yeah, Simon said, I follow Sam Seiden. He's my market guru. So far, I'm down $20,000. Yeah, well, everybody. I mean, I think some Big Eb, you said that I'm your market guru. I don't want to be a market guru. I don't want to be a market guru. I want to make my trades that benefit me and do what I think they're going to do. And if I can share knowledge along the way and hopefully make you guys better traders or investors or even more knowledgeable about weird things about the market like we did yesterday, then I'm fine. But I don't want to be a guru. I feel like that puts too much pressure on me, like I have to know everything. And I certainly do not know everything. You guys ask questions a lot of the time. I simply just don't know. But I'll go find that answer from somebody who is far more educated in the subject matter than I am. And I think that's part of this whole process, is being humble and knowing that we don't know everything, and don't pretend like you do, and don't confuse luck with brilliance. So Simon, thank you for that wonderful shot across the bow tweet about Sam Seiden. That was a good one. Shots fired, they said. That was pretty funny. All right, one of the other things that happened with Warren Buffett that I think was interesting is when Bank of America was dying in 2009, he stepped in there. And again, these are things that really help him further bolster his rate of returns and make him look so amazing. He basically sent Bank of America a lifeline, right? Gave them billions of dollars. I forgot exactly what the numbers were. But in order for Bank of America to say, hey, we want you to come in and give us billions of dollars, buy the shares, prop things up. He gave him some money. They gave him warrants too at like $5. And those types of things you and I can't do. We can't get those special deals because we're not bringing billions of dollars in the company. That's, again, one of these advantages that these guys have. All right. Let's see. Actual McDonald's automated people away. Yes. It'll be burger flippers and automated signs. All right. I think I got it. Okay. I think I got it. I got most of your questions anyway. Sorry, sometimes I wish I wasn't doing the show. I could just join in the chat with you guys. It was more fun. All right, so if you guys have any questions on that one, so I'm hoping that Heather and Alan, that you guys got a little more thought on trading market gurus. My personal belief is you should never look at somebody and say they have the answer. They're the best. I have to follow them. You can take Warren Buffett's information, Ackman's information, or even information that you get from here and simply look at it and say, you know what, I need to formulate my own opinions. This is food for thought. It might be good. It might be absolute dog shit. I don't care. I'm going to take this information and now I'm going to go and put it through my process, my filter, and make sure that I understand the trades I'm going to make, regardless of your time frame, regardless of your asset class. Do not let, and I saw the comment come through here a little bit ago, you got to make sure that you do not fall victim to CNBC. That you don't get sucked in believing that John Najarian is looking out for your best interest. For the most parts, they have portfolios built, right? The big difference, I think, between what I do here and what CNBC is doing is if I have a trade open or if I have a position open, I'm going to tell you right away, here's my position, here's where I think it's going to go. Those guys don't do that. They will go out there and they'll say all these amazingly glorious, fantastic things about why this company is so good and why you should buy it, and down at the bottom of the screen in micro fine print, it's like, John Najarian owns this stock. Well, of course he does. They have to put that on legally now because historically that's all they do is pump their own agenda. Jim Cramer's video about manipulation is perfect. And as small-time traders, we have to understand that we're being gamed by the system. And even though it's a rigged system, we can still beat it as long as we stay nimble and we stay small. If you start to get too big, then all of a sudden you have to come up with different tactics, and that's what these hedge funds are doing. They're manipulating markets. They're utilizing the media like Fox, CNBC, Bloomberg to issue reports, to issue press releases, to make announcements, to get on, Jerry Kudlow and make some comment about a company because they know the retail people will buy it. That's the nature of the game. So next time someone's a market guru trying to influence you, tell them, go away. I'll make my own decision. Thank you for talking to me, but beat it. I got other things to do. All right. Let's see. Is gold bottoming? All right, so that's it for my my little bit of a rant on market gurus. I think that for the most part, you should probably just shy away from them, make your own assessments, and I think most of you are all pretty good about that here. But you might have some people who are just addicted to other people, and you got to tell them, hey, just get away from that. So let me go to the charts here, and we'll look at some market action and get in there today. By the way, Bitcoin over $53,000 a coin. That was pretty amazing today. All right, so let's start with gold. This is an interesting one. I see we've got a lot of different chat about gold here today. Big Eb says, gold bottoming right now. It's about there. Yes, I agree. It's tough because you guys might recall that back here, as we were rallying back up, right? The point was we've been drifting down since August. It's making lower lows and lower highs. So that's clearly a downtrend. So even if we want to be buying gold because our long-term thought process is that gold's going to go up, which I think long-term it will, the trend is certainly still in place. And when we go back to that showtime, which was right here, we were talking about it needs to break this high, right? I think you guys anybody who's here might remember, we talked about this specifically, say it's got to get above this, 1975, 1980 mark. And lo and behold, what did it do? Came up, it kissed it, and then just came ripping back down. So to me, this is still in a downtrend. Now, has the dynamic changed? Are we looking at something now that's going to be traversing sideways between, let's say, 1770 and 1970, a 10% trading range? It very well could. I do like gold at this point. I do think that if you are a gold bug, but this is the spot where you might look to be buying in. You've got an area of demand that's actually from December or November, which is okay, but there's one negative thing here, and that's that this is a double test. Meaning, if I'll put a yellow box here so you guys can see it, you got an area of demand that goes all the way back into mid-June of 2020. We already retested that. That's that initial bounce, right? So to me, that's your first great buy point here is this big sell-off pop back up. Now that we hit it again, it makes me lose a little confidence in this level right around 1770. That said, if you wanted to, you could be buying some calls here, all right? Play that little bounce and just know that the premium that you paid for those options is your risk. Great. The trend is still down, so I'm not overly optimistic on this one, but I do think from a trader's perspective, yeah, take a stab at it from the long perspective here on gold. Now, of course, you look at the dollar index, which has been a pretty hot topic here for a while. It had a nice move up. We thought about this little inverse head and shoulders here. It's recently come back down and retested that $90 mark or got real close to it. Now you see it kind of moving back up. So I kind of feel the same thing, that the dollar is stuck in this little bit of a range between, let me throw some lines on here. And right there. So you got stuck between about 89.25 and 91.5, right? And you're near the upper end of the range, but until it breaks above 91.5, I don't think you've got an uptrend yet, right? We're waiting for it to make a higher high, and it did, right? This initial break here, would be considered a higher high. So in theory, we've broken that downtrend, but I need to get a confirmation of it. So to me, a break above this most recent high we established on the 4th of February, that will be a confirmation that we're now certainly making new highs, and then you start to see things move up a little bit more. So I'm still bullish on the dollar, but mildly. This is not like I'm aggressively bullish. I just think that it's stabilized. It's no longer sliding as much. You'll notice that the same picture happened, though, back here in 2020. Let me highlight this area. This area of price movement right here that's in yellow looks almost identical to what we see here in this second box. Those are pretty similar pictures where it was making lower lows, lower highs, then all of a sudden turned and started to make some higher highs, and then failed and came right back down. So to me, I'm still optimistic for the dollar, but just not as aggressive, right? Mildly aggressive. We get above 91.50, and a close above that, I'll start to feel much more optimistic. Dry ships. Boy, you want to know about the dry ships, huh, Larry? God, I had that stock years ago. DRYS. I don't even know. No. They may have changed their ticker symbol. No clue what it is now. I used to own dry ships, but got out of that one. Another one that's of important topic here is crude oil. We talked about this, obviously when we had the big crash back in April of last year. But crude oil has been on an absolute tear. And part of the reason for that, I believe, is the change in administration. I think you're going to have a lot tougher regulations on fossil fuels, and that in turn would cause this to move up. Plus, I think you have more people coming out of COVID and saying, all right, we're getting shots, we've now been immunized, and now we can get back to some semblance of normal life. Well, what I do like on crude oil is you're coming right up into this area, right around 62. Right, you've got a pretty decent supply zone at 62 on it, and it's been pretty much an unabated run for the better part of 6 months now. I mean, this thing looks really strong. If it's going to pause, it would not surprise me to see it stall here right around 62 and head back down. Now, that said, tomorrow, I believe, I'm really not 100% sure. I think we have crude oil inventories to mañana, I think. But I'll check that one in a sec. So that's my thoughts on gold. That's thoughts on the dollar. Sheena wants to know about CVX. Well, all right. And good to see you, Sheena. Nice of you to grace us with your presence. All right, CVX. Chevron. All right. Similar picture, right? If we've seen this on quite a few charts. This is where, being a spread trader for options would probably be a great thing for Chevron. To me, you've got two actions that you could be doing right now. Number one would be buying puts. Number two would be shorting this thing. If it breaks above let's call it 96, actually, go a little high. Say if it breaks above 97, then you dump it. But right now, it's at the upper end of this trading range. It's been stuck at for 3 months now. While it's looking good and crude oil is rallying, if crude oil hits that supply level and starts to come down, this thing's already at supply. So to me, this might be a turning point for Chevron. We'll have to wait and see. I might keep an eye on this one as a short for tomorrow, but it looks like both crude oil and Chevron might be due for a little bit of a pullback here, just based off of the zones and ranges that they're stuck in. Alan says a double test. Okay, let me. What was that we were looking at earlier? Oh gosh, I'm looking at too many damn things. I think it was gold futures. So let's bring up gold futures again, and Alan asked double test definition. Okay. So, one of the big things that makes what I believe to be the big difference with what's taught at Online Trading Academy versus others is really the concept of supply and demand versus support and resistance. And it basically breaks down to this. We can all stand on our living room floor and say it's going to support us, right? That's what the floor does. It'll support us, right? We know unless you get over 1,000 pounds or something, you're probably going to do fine. With trading, though, there's magnitudes of support. So, if you're walking on the street, for example, and you're on the sidewalk should, quote unquote, support you. And the traditional financial markets talk about support. Oh, support, resistance, support, resistance. Okay, well, how strong is that support? How strong is that resistance? If I told you that the layer of concrete was 6 feet thick, Okay, you're feeling super confident about it. You can walk across that thing and have no problems. But what if it was 1 millimeter thick concrete? You're gonna break right through it, right? So there's magnitudes here, and I think that's when we talk about supply and demand. You're now quantifying how much supply is there, right? What picture is created, or what is that picture showing us with regards to institutional buyers and sellers? So the side that I like to look at, and it kind of explains this a little bit, is if we are on concrete and it's supporting us, we're standing on concrete, and I take a big steel spike, it's got a big metal spike and it's got a little sharp point on it, and I drop it on the concrete. Let's assume it's a normal concrete sidewalk, so what, it's 5-6 inches thick, something like that. If I drop that steel spike, is it going to break the concrete? Probably not, right? You'll probably see a little puff of dust, maybe a couple little rocks or pebbles chip out of it, but it's not going to crack through it. Now, if I take the same metal spike and I just take the tip of it and I put it in a jackhammer and I now go at that concrete, after a certain amount of time, I'm going to break through that concrete because of the repetition of force and force and force, and over time, it's going to break through it. That's basically the concept of the double tap or double attack at it. So if we look at the picture that I was illustrating and drawing on earlier, you guys can see I do this little yellow box over here, and it's not drawn perfectly. I don't try to draw my boxes perfectly for you guys, but you'll notice that area, if we were right here, I would be telling you that there's 2 spots I think we should be looking to buy at. One is right at the top of that yellow box there. Oops. Trying to get me to pay for more subscriptions, TradeStation? I don't think so. All right, so there's 2 spots I'd be interested in buying at. One would be this 1840 mark. All right, I'll get this other line off. And then another real nice one down here at that 1773 mark. You guys all see that, right? So if we go forward, right, you can see that when at 1840 didn't work, blew right through it. Fine, that's what you have stop losses for. You're out and you move on to the next. But it gets down to that 1773 mark, and all of a sudden that one worked out very nice. Not only did it work out nice, but when it rallied back up, I noticed can you see it rallies up and then retests that 1840? That's nice. But it already took away. If there was some demand over here, and we won't get into in here on in the quantifications of demand, but if there was some, we could make the argument that some of that was eaten up here. Some of that demand caused price to be pushed up. Now all of a sudden we come back at it again. You're looking at another attack on that same area. The demand is lower than it was previously. So the more times we test and come down and hit that 1775 mark, the more we're chipping away at that level of buyers. So to me, that's the basic concept of testing something multiple times. And the more times you test that, the more likely price will break through. And I know we've got some big gold supporters in here, but hey, if it breaks down below that 1750, I don't particularly care. It'll probably drop straight down to 1700. You got about a $75 run. Anyway, I hope that explained that one pretty good. Brendan says gold futures got manipulated heavily. I think everything is manipulated. I think that just goes without saying in the market. Would I swing gold futures? Sure. I mean, I don't particularly. When I'm using futures, I'm more of a day trader with the futures market, or maybe a couple of days. But there's nothing wrong with swing trading gold futures. I mean, you get great leverage. It's a pretty expensive one, and it can have some pretty significant moves. But if you're on the right side of it, you're buying at demand right now at 1775. Just make sure you have that stop loss real tight so you don't get burned. All right, what other questions you guys have in there for me? Again, make sure you put some question marks in the front so I know which ones are which, because there's so many. Alan said, okay, that's a great question, Alan, and this just has to do with my own simplicity. He says, how do you decide between sell credit spreads versus puts? That's a great question, and the only reason I just do puts is just they're simpler to me. It's much more simple action. It's just one side. I still have issues with spreads. They still bug me. I mean, I do them, but not regularly because it's funny, I actually made a mistake. This is probably like 6 months ago. I did a credit spread on something, and I put the numbers in backwards. I don't know. I just had too much going on. I was rushing to make this trade. And luckily, it ended up working out. It was a huge rate of return. But I completely messed up the execution. And when you're doing spreads, you got to make sure you do things the right way. All right? You got to do the process properly. So spreads would probably be a better way to do it from a protection perspective and rate of return. But I just do the simple sell puts because I'd be fine or buy puts if I think it's going to drop. And that way I have defined risk. And if I wanted to buy at a lower price, I'll just sell the puts. I like to keep things as simple as possible. All right, what else you guys got for me? Any more questions come through here? I don't see anything else. I think there's some up the very beginning of the show. You guys had some questions. Gregory, you know what? Just for fun, if you're still here, Gregory, let's go look at GameStop, huh? Let's go look at GameStop. This thing's going right where it deserves to go, in the tank. And, you know, part of me feels bad for these GameStop people who bought it. But, I mean, when we were right here, guys, when it was at 350, I was screaming on the show, stay away from it. If anything, shorted. I actually shorted GameStop at 350 and ended up getting out at $90 a couple days later. And I only made 35% rate of return on something that fell from 350 to 90. That's how inflated the options premium was on those. But right now, I mean, this is what it should be doing. It should be going right back to where it was. You know, it'll probably get back down to this $30 mark and then traverse sideways. And unfortunately, the people left holding the bag are those diamond hands. So instead of calling yourselves diamond hands, the Reddit users, the GameStop holders, you should call yourself bloody hands. You're going to hold it forever until this thing goes into bankruptcy. I mean, that's why I took a picture on Twitter, because I think it's a joke. This company is still around. It's going to disappear. Anyway. All right. Sorry, I'm scrolling through here a whole bunch to try to find questions. Larry says, if I want to sell a call or put, would I have to physically own shares? No, that's naked, but it's also very dangerous. Okay, so selling, as long as it's cash secured, you're okay. The challenge is when you're selling a naked call. That's more dangerous. I don't do that. And I don't think most brokerage firms will let you. But if you're doing a cash secured put, and I've shown this example many times, yesterday, or actually not yesterday, last week, I think we were doing it with MJ. Maybe even this week. I'm losing track. No, it was last week. When we were up around that $34 mark on Thursday, I had a question from the viewer saying, you know, what would you do here? What, where, why? I said, I'd probably just sell puts. And basically what that means is, if I wanted to sell, we use the number 24, right? So here's $24 on your screen. If I sold the $24 put, I'm collecting premium. And that was back when it was up here at, let's say, $34, right? So it's $10 lower. I would have collected whatever premium was there for that option. And I don't remember what it was, but let's say it was, I don't know, $100, right? You know, let's say you collect $100. Basically, what I've committed myself to do is buy 100 shares of MJ at $24. So I need to make sure that I have $2,400 in my bank account. And if it makes it to expiration or somebody exercises their options, I am committed to buy those 100 shares and basically $2,500 or $2,400. That's all your commitment is. And I love doing that. I really love just selling puts, because it allows me to define a rate of return on that investment, and also allows me to put a point on that chart where I'd be happy owning it anyway. Right? I think we talked about that here. It's like, I'd be happy to own it at 24. Right? Sold off a little bit today, but all right. Okay, yeah. I haven't seen the video, but I'm sure it's a dangerous thing. It's a dangerous thing. Well, Traders Army, I'm sure I'll have you guys on. I don't know. I'm trying to get Corey on. Chuck, I'm trying to get you on as well. Let me know when you guys want to come on and talk options. And I think that's a great topic on, you know, why don't we ever want to sell naked calls? Naked puts, that's a different story. But I think it might be nice to kind of run through a risk matrix and say, you know, why not do these things? And yes, Traders Army has shown me, and I know how to do spreads, guys. I know how to do it. I'm not good at it, and I just go back to the basics of it. But yes, we should get Traders Army back on here soon to do it. So there you go. Those questions, if you got more, keep them coming. AMC is a different story. Yeah, so AMC, and that's a good point there, Sheena. GameStop is dead, right? I kind of wish I could do a little time capsule here and show it in 5 years. And in 5 years, GameStop will be gone. If it will, there may be one or two around, but everybody's streaming and downloading games. You're not going to need to go there anymore. So that one's gone. But AMC will be around. Movie theaters aren't going to disappear. So yeah, if anything, AMC I'd be more comfortable holding long term. But GameStop, God, these diamond hand morons are just getting smoked on it. And it, you know, you kind of feel bad for them, but then at the same time, you're like, you chased this thing, man. This was all on you, kids. Yeah, you fell right into the market game. All right, let me see. I think I had a couple other listener questions here. Let me make sure I get to those. And the other one was, am I going to have Larry Jacobson back on the show? I'm trying to have Larry Jacobson back on the show. Just, he's busy man. All right, I'll read this one and then I'll wrap things up for today's show, and we'll go to more stuff. Damn it, I forgot to put the guy's name on here. Sorry. I think this might have been Michael. He says, I'm an OTA student and learning about crypto. In your show, you mentioned that the cold ledger wallets are safe primarily because you have the private keys and not connected to the internet. But don't you have to connect the computer to the internet to set it up and to send or receive coins? How do you go about doing that? Is it okay to save the public address in Coinbase Pro to send coins to Ledger easier? Okay, so a couple different things. The main reason that you want to have these little guys, these Nano Ledger S's or Trezor or the different storage devices, is because you have the private keys and it's in your storage and it's not connected to the internet. Now, when you do connect this to the computer, because you do have to send, get power and send it, it's going through a program, an encrypted program. So they first off would have to have the program, and then they'd have to get the your passwords to this device as well. It's not totally foolproof. They could potentially do it, but your whole point of this is you're trying to reduce the points of contact, the points of attack that anybody could get in. If you have it at Coinbase, I'm not going to say it's 100% safe, right? They could get hacked. An employee could go in there and steal some private keys and all of a sudden take some stuff away. Brendan says YubiKeys, that's another one, but I think it's just safer to protect it. I don't worry about it when I connect it because it's an encrypted connection, and also I have a password I put into this device, which used to be 4, but now I do the full screen full of passwords just to be safe. And even if somebody does get this and steals this and takes it home, they still won't be able to get that password because it'll reset itself after 3 missed passwords, and I have the backups key codes here. Is an expression, be right and sit tight, not be wrong and sit tight. Yes, Brendan. And unfortunately, there was, I think Wall Street Journal did an article about this kid who, took a loan for $20,000 to buy GameStop. And he just have to hold my head in my hands and go, oh my God, you idiot. You idiot. But it is what it is. Edward, thanks for the laugh. Yeah, apparently that's popped up. Is market guru Sam Seiden. Really? Okay. That's funny because according to subpoenaed trading records, it actually showed that he lost money from, I believe it was 2000 and, it was a 2-year window where the FTC says he barely traded and he lost money. That's my definition of a market guru. Okay, so if you look at the last part of this one, it says, is it okay to save the public address in Coinbase Pro to send coins to the ledger easier? Sure, you can give your public address to anybody you want. Matter of fact, give it to anybody and say, yeah, here's my public address, because if someone randomly sends you coins, you get to keep it. So yeah, public address is no big deal. It's the private keys that's all of a sudden your stuff will just disappear right away if you do that. So make sure that your public address and private address or private keys are totally separate, different things. All right, let me go to economic calendar. I'm going to run through this one real quick. I got a couple lists of questions, but I didn't get to all of them. I wanted to start off today by showing what happened today on the economic calendar because it was kind of eye-opening and much, much, much better. If you look here, you have retail sales numbers. They were supposed to come out at 1.1%, and they came out at 5.3%. That is really a good pop. Normally, when you have an expectation like that, it might come out like 1.3, 1.5, relatively close, but it's not that bad. I mean, this is actually really good. I'm surprised we didn't see a bigger market move today because of that. You also said PPI numbers. Now, that was a big pop. We were expecting PPI number to move from 0.3% to 0.4%. Came out at 1.3%. So, that's obviously showing a rise in inflation, but that's nothing to worry about yet. You had capacity utilization rate. These numbers are really good down here at the bottom. I mean, basically all the numbers today for the U.S. were pretty damn good. Inventories were moving up a little bit. Industrial production was dropped, but better than expectations. So there you go. Now, on the earnings front, you had Tilray report earnings after market close. Unfortunately, I didn't get Twilo, Energy Transfer, or whatever this company is, but Shopify also reported earnings. They did very well in their earnings and were actually down on that news. So that was before market opened. Anyway, there you go. That's your earnings calendar. Tomorrow, here's what we've got cooking from an economic perspective for the U.S. We will highlight those up here. You've got unemployment claims, natural gas storage, crude oil inventories. You also have import prices, housing starts, building permits. So a lot of big announcements coming out tomorrow. For the rest of the world, Australia has retail sales numbers, and there's actually some pretty big Australian information still coming out later on tonight. Earnings calendar for tomorrow brings you Roku, Walmart, Applied Materials, Southern Companies, and the Trade Desk, TTD, will be reporting earnings tomorrow. All right. A couple of big comments. Riot is killing it as of late. Yeah, they're absolutely going ballistic right now. People keep asking me what I think about it. I was like, you know what? I like it. I just think you got to be careful chasing these, the rockets when they move. Wait for maybe a little bit of a pullback and a little bit of drop down, and we'll see. But I'll show you guys a picture of Riot, which has just gone parabolic. Here's Riot Blockchain. It's up 30% today. It's been a beautiful run, but notice today you had really high volume. It was over double for Riot Blockchain. So at some point, that rocket ship will stall and have a nice little pullback here and maybe present a buying opportunity, but I would not be buying right now. Be careful with that one. Let's see. Mike said, has Tilly stopped doing the Sunday updates? No, Tilly is not. She's studying to take some licenses right now, financial license, so she's just super committed to that. And I said, you know what? Take your time. So she was going to do it once every 2 weeks, but then she was sick over Valentine's Day, so I'm going to try to get her to do it once every 2 weeks, but thank you for checking in on that one. What else? Brendan says CPI is bogus. Yes, it is. And I'll be honest, I think most economic data is bogus. And here's the only reason why I bring it up on every show, what's coming out tomorrow or what those numbers were, is it's more important to know when the announcement is coming out versus trying to trade that announcement, right? Just so you know it's coming out at X time, you don't get caught off guard. But saying, oh, I know it's going to beat this expectation, they're going to raise their forecast or whatever, that's bogus. All the data, I think, is totally manipulated and skewed. That said, it is important to know the time it comes out. So all of a sudden you're in a position it starts ripping on you back and forth. You go, what the hell's going on? Oh, shoot, Bernanke's speaking or Powell's speaking. That type of stuff you got to know. Nice, Lisa. I hope you're still enjoying that ride. Let's see what else I got. Are there any publicly traded stockbrokers other than Schwab, Interactive Brokers? Yeah, you've got Ameritrade. Almost everybody out there. Publicly traded stockbrokers other than Schwab and Interactive Broker. You've got Ameritrade, you've got E-Trade, you've got JP Morgan. You can open up a Morgan account. So Bank of America, you can open them almost everywhere. Okay, for tomorrow, I'm hoping, fingers crossed, that I can do a show for you guys tomorrow. The reason I say that is I received a letter from Edison yesterday telling me that my power was going to be turned off for some project that they're doing in the neighborhood. So, for right now, it's all systems go. I will try to make sure I get the show done at the same time tomorrow. I'll let you guys know on Twitter, probably 30 minutes before if there's any issues. Of course, how would I do that? Oh, I can use my phone to send that. Unfortunately, I haven't figured out how to do this whole show from my phone, which would be really weird to just do a 40-minute or an hour show just from my phone and me talking with no charts. Oh, yeah, it is. It's all right. Tom's right. What does it take to join the Coinbase IPO? From Medic Man Down. You got to know people. You have to have a connection somewhere, which is why I bought VIH, because I don't think I'd be able to get into the Coinbase IPO. But VIH is a SPAC and allows me to get in there because it's publicly traded before backed BAKKT comes to market. So in order to get Coinbase Pro or Coinbase IPO, you're going to have to know somebody, and it's probably going to be very, very overinflated. I believe the number I saw was $77 billion valuation already. That's the initial one. I'm pretty sure that by the time we get to the IPO date, that thing will be trading at more than double its initial market IPO price. But that's just the nature of IPOs. This is going to be one of the most pumped, heavily touted ones out there in quite some time. All right, that'll do it for me for today, everybody. If you got questions, send them on in. I'll put it on the screen here. You can go to TraderMerlin@gmail.com to send me any questions you like. You can always click the thumbs up button if you enjoyed today's show. If you didn't, send me an email and let me know why. And also send your comments down below the video on YouTube if you have them, and I will get to all those on tomorrow's show, because for right now, it does seem like I'm going to be doing the show all by my lonesome, but I do have a nice slew of guests for next week, so it'll be exciting to get tired of just me talking. All right, that'll do it for me, everybody. Hope you had a great trading session out there. Let's see Bitcoin 55,000 tomorrow. I'll see you guys then. Take care.